What's up, owner investor? In this video, we are going to figure out what problem the business is solving for its customers. This is the reason we do this is because this is the most fundamental aspect of understanding a business. This is how every Shark Tank pitch starts, and it's how we're going to start our journey as well. It doesn't matter if you're looking at stocks, private businesses, or if you're trying to start your own business. Every business starts from this fundamental aspect of solving a problem for a customer, and then everything else, valuation, accounting, competitive advantages, what the stock performance will be, all of these things, they branch out from this fundamental core aspect of a business. So there's three key themes as usual. So number one theme is a business's competitor isn't just its direct competition. It's anyone that can solve that same problem, but in a better way and at a lower cost. So I, when we start thinking about businesses from this standpoint of the customer's problem, the your kind of the lens through which you view competition also expands because now it's not just your direct competitors, it's maybe some kind of tech-enabled disruptor that might come in to the industry in the future, right? And so that's theme number one. A business's competitor isn't just a direct competition; it's anyone that can solve the customer's problem. Number two is delighted customers are the best salesmen. That means that the companies that have the best products and services, they don't actually have to advertise nearly as much because their customers spread awareness of their product through word of mouth. And that's the most powerful form of marketing. It's exponential, nonlinear, so powerful. And some of the best businesses in the world often don't advertise. So that's theme number two. Delighted customers are the best salesmen. Number three is the best businesses often have a loyal base of customers. And then the business finds more and more adjacent products and services to sell to the same group of customers. So the two best examples of this are Apple and Amazon. So that's theme number three. The best businesses often have a loyal base of customers and they find more and more adjacent things to sell to them. Okay, so to demonstrate these three key themes, I'm going to briefly talk about Amazon, Trader Joe's, and Apple. So if we look at Amazon, right, we all know that Amazon disrupted retail, but I want to go a little bit deeper on how that happened, right? They disrupted retail because they were able to solve the customer's problem in a better way than what was existing previously, right? So let's take Macy's, right, as kind of a good company. Is a good example of a business that Amazon disrupted, right? So Macy's was a great business for many decades. The department stores reigned supreme in the last century, right? And the problem that Macy's was solving was that customers wanted a one-stop shop for a variety of retail goods like clothes, home decor, furniture, etc. And they didn't want to travel too far from their homes, right? But then along came the internet and Amazon, and now customers had more selection at a lower price, and they didn't have to leave their house, right? It's just 10 times better than what existed before. And so Amazon won based on selection, convenience, and price relative to the department stores. Now, this sounds obvious in hindsight, but when we start looking at individual companies through this lens, we should always think about like who else could solve the same problem that this business is solving for its customers, and is it possible that they could potentially do it at a lower cost than the business that you're analyzing, right? It's a more kind of first principles way of thinking about competition as well. Okay, the second example is Trader Joe's. So this is one of the most successful grocery chains. They don't advertise. Instead, they let their loyal customers sing their praises and grow through word of mouth. This strategy takes longer to pull off, but once you kind of get to that steady state where you're a fully, scaled, multi-billion, multi-hundreds of billions of dollars of revenue, now you have a huge cost advantage because you don't have to spend on advertising, which means you can charge a lower price, which means you gain even more market share, which means you can charge an even lower price, right? There's these lots of these positive feedback loops that are hidden, right? The companies don't necessarily come out and say this, and these things aren't directly visible in the financial statements when we get to that part of the course. But it's important when we start thinking about businesses, when we start looking at businesses, to kind of keep these frameworks in the back of our mind, which is this idea of customer obsession. So as investors in businesses and stocks, we should be thinking about, okay, is the company that we're investing in, are they obsessive about the customer experience? Because we now live in a world where the customer really has a lot of power. And the business that owns the customer relationship typically wins, right? Third example is Apple. So, Apple started out with computers and expanded into phones, laptops, tablets, watches, headphones, right? This is a really powerful business strategy. It's really hard to understate its significance. So these are normally separate industries, right? Phones, laptops, watches, and each of the problems addressed by those, each of the customer bases in each of those different industries, laptops, tablets, watches, what have you, they have to acquire their customers separately, right? So each of those industries has to spend on customer acquisition costs, and therefore they have to charge a higher price. They can't invest as much in R&D because that customer acquisition takes up a portion of their cost structure, right? But when one company like Apple is able to take one customer base and cross-sell all of these different products, it can spread its advertising and its customer acquisition costs across those three segments, right? Which means it has more money to spend on product development, which means it can potentially charge a lower price. It's such a powerful business strategy that's just not talked about very often. This concept of spreading customer acquisition costs across multiple customer bases. Okay, so those are the three examples. One more thing on Apple, right? So because they solved that one customer's problem really well with the computer, that they were able to expand into other adjacent electronics segments, and that's not an easy thing to do. Those are separate kind of product development teams, but you get to share customer acquisition costs over time, especially as you build an ecosystem of products and services, right? And because of that, right? So let's rewind the clock maybe 30 years, right? And let's say you were looking at BlackBerry stock, right? And you thought about BlackBerry stock, the competition for BlackBerry as other phone companies, right? And at that point, Apple wasn't in the phone business. So instead of thinking about BlackBerry's competition as, is there anyone else that could come out with a better product? If you thought about BlackBerry in this very limited way, other phone manufacturers, you miss out on this massive amount of indirect competition that just comes out of left field, right? So that's why it's really important to invest in companies that are just like laser focused on the customer experience, on making sure that they're on the kind of cutting edge of whatever problem that they're solving for their customer, whether that's in electronics, whether it's gyms, whether it's airlines, home improvement stores, like any of those things, right? So those are the three examples. If you want even more practice, so we're going to go through Costco, Spotify, and Basic Fit in the coming videos. But if you want some extra reps, pick some companies where you're familiar with the product or the service, but you haven't really looked at the stock or the business, and write out a few sentences on what problem is being solved specifically for the customer and how that problem is being solved, and post it in the comments section. Okay, so the bottom line is, if you're looking at a business, scratch it. The bottom line is, number one, If the business you're looking at isn't solving its customers' problems, someone else will. Number two is delighted customers are the best salesmen. Number three is cross-selling and upselling, those adjacent products and services, is one of the most powerful business strategies when executed effectively. And understanding these patterns of business strategy will help us calibrate the numbers when we punch in stuff into the valuation spreadsheet, right? Like, so remember, the end goal is this, right? The EPS growth, perpetuity growth after 10 years, diluted EPS, return on equity, payout ratio, that'll eventually come out to evaluation. But understanding some of these like fundamental business concepts will help us make more informed decisions or assumptions when we get to this part. Let's see if I have anything else. All right, that's it. So post your questions, comments, random thoughts below, and I'll get back as soon as I possibly can. Let's keep going. I'll see you in the next video.